everybody doing today? Let's jump right into it. Let's talk about some patterns for September. Get into major markets. They look weak, but let's kind of dive under the surface and see really what we can expect because time's running out. Everything that we've been waiting for almost a year is about to come to fruition. And we just need to kind of pinpoint exactly what the heck we're doing. Everyone, get over to harmonictrader.com, get your access, your 14-day free trial to Harmonic Pattern Collection by sending your username to hpc at sr-analyst.com. And then again, you guys can have access to any one of those too. All right? All starts at harmonictrader.com. Great to see everyone today. What's going on, chat? MH, Ruski, Rigo, GoldenEye, Freeze, Red, Shredded Lattice. I like that, David. How are you today? As always, Justin, Pat, everyone else. Let's talk some patterns. Let's talk big patterns. Let's talk weekly patterns. Let's talk NASDAQ. NASDAQ 100 checked back last week after a vicious down week. Now what? This is a huge week. By Friday, we're really going to know the extent of what this reaction was or really started out to be. This is the big 1618 up here. Q's hits the hop. Almost a perfect T1 on that move. But listen, the reaction that started in August is trying to resolve itself. And it's trying to resolve itself right here at this counter HSI signal. We talked about that. That's 18.5. 18.515 to be exact. So what needs to happen? Last week you did the check back, no follow through yet. That could change. We violate last week's low. Then we're looking at something larger. And that's really what we're kind of focused in on. 18.5. If not, then the dot confirmation. And I keep coming back to last summer because there's so many parallels to last summer. You know, there was the trigger, but where did the dot come in? Into that range. And that seems to be what we're faced with currently. I mean, there was the initial test here. Let me blow this up. This was last summer. And last summer was mild, although it felt kind of bumpy getting into October. Look, we had the HSI here. We had the check back, 1 and 2 green bars. Then we start to look for it. That was like 15,660. Take it all the way up to 21,000. And we have a similar development right here. So I would think, you know, generally, trace it out something like this, you know, somewhere in here, maybe 17.1 if it falls apart. But whatever this resolution is down here, give me a dot. Paint it for me, please. And paint it soon. That would be next week. You'd have to have a green week this week. You'd have to have another green week next week. That would also set up the first of what could eventually be a 3-bar breakout. I think we got to get through September. And the way it's stacked currently is you're going to have some bumps. It's not quite there yet. So be mindful of that. Be mindful of the fact that we are adhering to a pretty firm framework. Target 1, 17,106. I mean, had we hit that and bounced, I would have said great. But we came back into the zone, clearly squeezed 20K on the downside, and I'd say 18.5, or on the top side, 18.5 down there. And we'll see. This morning, they tried to rally them up, took them back down. Now the big deal yesterday, it's a good reason to show up, get the updates, is we did get an HSI on the daily. That's like a first sign after a rather dramatic drop off the last bearish signal. So a bit of a ping pong action. We also have double confirmation there, there. Early stages. Like today would be, yesterday was 0 day, day 0. Today would be maybe day 1. And again, even on a daily, of course, we want to see a dot, but that would take a few more days of consolidation here. And so you've got work in front of you. We've got some work in front of us until we resolve the big reaction that started right there at the, July, end of July for some of the other indices. So hit that. Let's focus on that. What's up, Intel dude? Yeah, hit the like. Sure, subscribe, please. Guys, if you enjoy what's going on here, please subscribe, hit the like button. I really don't care. I mean, there's no sponsorship here. There's no ads. I'm really not, I really should promote a lot more, but you know what? Every time I try to promote, I get problems. So it's cooler this way. It's better to have people who want to be here and get it without having me to really do anything except for go off on the patterns, which is what I love to do. Yes, thank you for all the birthday wishes too. Turned 55 on Saturday. Yeah, it's a big number, guys. Big number. What are we going to do with the rest of this time? That's kind of what I'm thinking. Like, I really want to plan out what I want to do next 5 or 10 years in a way that maybe I haven't. So, it's interesting times. Markets, everything. Don't get me started on crypto, at least not yet. But it really, interesting times. And I still say we're coming into a very heady second half of the decade. And I'm with the markets, with myself, I'm thinking not 1 year out. I'm thinking 3-5 years. Where we're going to be at the end of this decade with these markets, what we do here. So let's move forward on that. Thank you. Absolutely. What's going on? I think we've got a voice. You guys sounds good. Thank you, Scotty. Appreciate that. Daniel, everyone else. AA. Rodrigo. Yeah, we should have good volume here, folks. Listen, that's NASDAQ's deal. And I do think this is a big opportunity being fed to us quite soon. Let's get ready for it. And let's just go through the top ones of what should we be targeting going forward. Like, here's Microsoft. Since July, really firm retracement. A couple people saying, hey, this might be a head and shoulders top. I'm not one of them, but let's kind of dispel some of the kind of common talk out there. Whole bunch of people saying, well, maybe this and then that, and then you break down. I'm not of that opinion, but a couple people have asked, isn't that a head and shoulders? I would say go to the weekly here. What's going on the weekly chart? Because let's clean it up. Again, Microsoft here at same kind of a thing where it's at its weekly 1618. And it looks like this. We came up, beautiful, bang. Remember that 886 from last summer? And then we had the digestion phase. Okay, that was actually a 113. We're going through an exact repeat rhyme of last year. There's our 1618 right there at 436. Now 409. We went as high. Was that a 1902? Almost. But let's just leave it at the 1618. Call it a 1618. And then that's a 236, a 382. These are all possible. See point and back up. The only thing I'm looking for, the 382 would be a maximum, but just like last summer, I want that. We had a beautiful shark last year, but it didn't get to T1, and I'm going to say that's a similar situation that we have to kind of get through. But how do you do that? How do you resolve this little correction and only have it be a little correction. Well, you hold. So, this price action this week, next week, will dictate really going into October and, dare I say, the election. Major consequences. Major consequences of how people are going to, I think, react or overreact to what's about to happen. Now, of course, tonight, the big debate. Get your popcorn and let's have some fun. I mean, really, let's have some fun with this. I just think that I respect everyone's opinion as long as you are not anti-free market. That's all. That's all. That's for me for all through all these years. Keep the market going, and you do that by favorable financial policies. History has shown, some of the best markets, like they were under Clinton. Bush left he left the economy in shambles, and then the Federal Reserve was the friend of Obama for sure with all that QE stuff. So it's definitely not. I don't think it's a straight line, but everyone wants to pay lower taxes. I know I do. And everyone wants to see the markets not be threatened like they've been lately. So let's just see how it goes. But within the charts, we're looking for concrete signals. So I try to shy away from narrative as much as possible. Narrative will just, absolutely put you in the wrong headspace. Man, are we getting more rain again? We're getting a huge storm right now. Here's the deal, okay? My thought with just the larger macro is there's so much money out there that has yet to be spent, and the government wants to spend it. They want to give it to companies like Microsoft that, I wouldn't be surprised to see this thing continue to expand. But it has to hold here, much like we did here last year, and we need a dot really soon. So look, you violate the low and you break down without any kind of significant development, then then it's going to just take longer. The thing that kind of the one little trigger that I think is very helpful to people is looking for our harmonic strength index to get above the 50 level to basically turn the light switch back on for continuation. We see currently we're still underneath these levels, even our amplified right there, okay, under the 50. So we need to see that happen first before we can assume anything like a continuation or resumption or what have you. So we're still dealing with this corrective phase that started in July, end of July, that we talked about. Now, there are other markets. Check out Oracle. Big NASDAQ play up here. Now look at this. You guys tell me, what do you see? This is Oracle up big today, up 11%, running right into a massive weekly hop level. Massive. But this is also, that's only a first step, but this also shows us kind of the strength of when you crack the 50, especially the longer term. You cracked the 50 here, it was 2 weeks ago. And amplified, that's our amplified RSI, that has firmly held all of these. So again, secondary ways to look at directional strength, what's behind the force of the move. I think this, I'll be watching Oracle for sure. A huge move right into the zone. And where's HSI? Not there yet. So that might take a few more weeks, but that's pretty strong. I'm going to respect the type 2. Maybe we get the confirmation above it. I thought that was, in light of today's red day. A couple more of these, of the top 7 mega cap, mega tech. Netflix has been interesting for a while because we have some prior patterns. I think you got to even go back. I think the monthly shows it. the monthly should be up here. No, it's a weekly. It's a weekly type 2 against this deep crab, and that is permissible. What's going on here? What do you mean fake website? Oh, come on. No, not today. Anyway, no. Why are we doing that? Anyway, so 624, 625. I know I've brought this up a while back, but look, T2 was here. Let me clean that up. There's T2, but what's going on here? Where's confirmation after T2? Nope, nope, nope. And actually we go counter HSI to send it back into the zone. That's a sign of strength. That's on a weekly. That's Netflix. So until I see either upside confirmation, bearish confirmation up here, not too concerned. And if anything, if we turn back up in Netflix, well, that would be a failure of a continuation of the all-time highs. A lot of markets are in interesting positions. Let me do a couple of the other big ones, and then I need to do a deep dive on semis. Here's Amazon.com. Okay, Amazon. We know there's patterns up here, big patterns that on the weekly basis, we've actually gone back-to-back patterns. Amazon, you guys know I was pounding the table 2022, 2023 on all of these because of the weekly patterns. And now we're back here with some bearish patterns, but we had that reaction and we run into the counter HSI. So break it down. What's going on here? A nice move down, 190 down to 150, but that was it. And if we can check back on Amazon, that's a 166. Also notice, which way is HSI moving? It's up. It's trying to get through the 50. That would be an important development. Same with Amplified. You get those two to move up into the 50 and go from 50 to 70 or 50 to 886. That's where your accelerations can happen. It's not happening in all tech, but I think Amazon, what is suggesting is that we're just going to do a reaction. A lot like what happened last summer. We had this kind of a deal last summer. We came down, got a counter HSI, and started the move. The move really was initiated last summer with the 50 break again. So to me, absolutely want to keep your eye on the next week, 2 weeks. Can we finish this reaction? Are we going to get a couple of dots? I think it's 2 weeks, and I really, looking at the calendar, today is the 10th. I would say maybe by 2 weeks from Thursday, it'll be clear. Thanks, Intel, dude. He's saying the software has made you soft, so you don't have to draw anymore. That's so dynamic-wise, in terms of drawing patterns, it's a great comment. So what he's saying is that he's using the software. Look, everything, it's great to learn. And I recommend that everyone, you become a basic member over here, access all the resources, okay? And once you do, you can learn how to draw manually. But what's the problem there? Oh, there's a problem there. I don't know why that's not showing that. But there's all the, okay, there's all the webinars. Check that out, and all the cheat sheets. But what makes it possible, in my opinion, for really being able to handle many markets and sort them all out is to have the automated algorithms run for you. And you might be able to draw a software, you might be able to draw a pattern, but the software doesn't pick it up because there are massive constraints on every pivot point, which is why we get the clean patterns automatically generated that we do. Mix that up with the confirmation strategies. Okay, it's all designed to turn these structures into opportunities, pattern levels, not just pictures. It's important. If you're manually drawing, you're susceptible to mistakes. It's just, it's the one thing I always wanted to do was code it out so that the patterns would be uniform. And that's what we have. And that's what we're looking at with Amazon. How do we know it's only a reaction? Well, we've been here before. Throw down. You go back a year ago. Same thing here. We're looking at all of that. Now, I want to talk about things like, ooh, did Broadcom get down there already? No. Things like Broadcom are apps. They're reminding me of 2022, except for on the daily chart. Broadcom, what is it? It's a massive bat, type 2 bat inside of a channel. We've been here before with the likes of NVIDIA and others. I'm looking at this as a massive opportunity to buy a top tier semiconductor that will carry you through the rest of the decade, if not longer. Where is it? I'm looking 129. 129. We don't have any HSI just yet. Amplified did get oversold. What do we know? Well, we certainly want those to complete, and we'd want them to complete like here and then get above the 50 and resume that long-term uptrend. And here's the long-term uptrend weekly basis. We're scratching this line. Long-term uptrend. That's Broadcom there. Okay? That trend continues. If it's 140, 129, or even 113, we are targeting this entire area in the next 6 weeks, somewhere like there. Just like, remember last year? Another dot. The similarities to last year are impressive. Maybe a bit more of a retracement, maybe not so much on a percentage basis, but the continuation kind of setup is similar. Now, there's others that are maybe not as ideal, but we should be lining them up. Applied Materials. Here's another one. Looks like garbage, right? That was 250 all the way down to 175. These are sizable retracements. I like it, and you want this. You want this thing to fall into your lap, quite frankly, and give us some clear patterns. For Applied Materials, we're not there yet. We just registered and checked back last week. Just like NASDAQ, we're probably 2 weeks away, but take a look at what Amplified's telling you. Hey, can we stabilize here? It's still early. And same with HSI. We're under the 50 level. So we're still monitoring, and we could be monitoring for a few more weeks here. But the big return move comes when we get back above. So if you're languishing, your favorite stock is languishing like that within this retracement, give it a little time. That's all we need to do. Hey, I'm going to warn you guys. I don't know if we got like a mini hurricane coming through Miami right now, but if I lose a connection, don't be surprised. What's up, Getty? I agree with you. He says manually drawing can be great. Manually drawing is great because you learn the differences between bat and crab, and you get the experience point to point, which is how I started. I mean, I started with a spreadsheet, and we would measure every point, and I think that had a lot to do with how I was able to pick up so many relationships and differentiations, because we would look at every bar and then measure the bar to bar and run a spreadsheet. That was long before the software. Let's talk a couple other big boys like Apple. What's going on with Apple? Up here against a dot on the weekly, 228, 230. Last year kind of was underperforming right up until about April of this year. A lot of these were, there you go. A lot of this ended up being a perfect type 2 at 129. And I don't really have a problem with Apple. Apparently people had problems with their big event yesterday or 2 days ago, whenever that was. We're just hitting some top end resistance of a couple of yellow dots. And I've done the dots to try to really simplify all of the complex confirmation strategies that we have. And I would dig into volume 2 if you want to learn about harmonic pattern confirmation, but let's just respect the dots. And the obvious dot levels are that, here, 235, 230. Those are the last two resistance levels. On the lower side here, well, you come back to 206. If we're looking for an opportunity into October, yeah, it's probably down there. That's daily. Take a look at what Amplified and HSI are doing on Apple. They're starting to scratch some oversold, have a little more work to do. Not an opportunity yet. Not an opportunity just yet. A couple other big ones. ASML lithography. Here's one that I've said for a while. We want to look at this between generally 700 and 800, depending on what time frame. Here's our weekly. Okay, 700, 791. That's target one. No confirmation. We had a couple of things on the daily. Down here we had a crab. Where'd it go? Where'd my crab go? Oh, it was a crab, but it was kind of this crazy HSI back here at 780, which was tested, finally retested. That was Friday. But look at what your current readings are doing. This is how you know. Like if we're diving into a zone, let's say we're targeting an area right around there. That's like 760, 780, 775. And you hit it and look at your readings. You just respect that. Let it fall. Let it come out of the zone. Let it do its thing. No opportunity on that just yet, but then we move to the weekly. We still need a little more work to do. But I think once we resolve that area, like the rest of them, these are sizable opportunities. This is already 35+% off its highs. And so let that come in. We will be sizing these up, and we'll be talking a lot more in the weeks to come about this. KLAC, 680 is that number. Currently 700 and change, but here you go. Shark, okay? We went initially back in August, Shark to 50. Now we're back at we're ready to go for 690. But just go dot to dot. I mean, KLAC is another one that we want to size it up in this zone. And it might, look, this is one hell of a reaction. You go from a dot capitulation, which that's what that was, around 650. The measured levels were 690, all the way back to 820. And then you get what happens there. Yellow dot. Now, again, take a look. Yellow dot happens here and you crack the 50. That's a much better position to understand, okay, is this over? Where's HSI? There. And then when does it crack the amplified 50 line? There. You could even go this big bar. Respect that, because we don't even want to mess with it. And I think this is something that some of the strategies, I call them in-between strategies, because I'm realizing there's a lot of things that I look at that I haven't really communicated, and the one I'm really stuck on in recent weeks is trying to show people, like when you break down the 50, that's where your accelerations happen. Okay, and then we're not even messing with it on the bullish side until we get some clear development out of the zone. Again, folks, get with the software. You can do this manually, but the other stuff, the confirmation strategies are there for a reason, because you're going to overrun patterns. You still have to pinpoint within the measured level to reduce drawdown exactly where the pivot will occur. Couple more. Google ideal in that whole scenario. Where's the weekly? There you go. That is to a T why we're waiting until full development occurs. Look, there's the breakdown under the 50. We get oversold, but that's not the opportunity. HSI has been designed to trigger early, extremely early, to where once it turns around, then you have the formation, the kind of the resolution of the prior trend that you need before you can assume that this is over. So this is a weekly chart. Like I said, we've got a lot of work to do this week. Even if it was to pop up. Getty's asking, how rich, you guys know how rich Scott is? I'm not rich at all. I'm not rich. Define rich. Am I rich versus $100 million guy? Am I rich versus somebody that has a negative net worth? Do I have a 7, 8, 9 figure net worth? It's up for you to decide. I'm fine, man. I'm fine exactly where I am. Okay? I know I have more money than you, and I don't even like to talk about that. So let's kind of move on from that. It's not really why I'm here. You guys, do you think I would be, wouldn't I be selling this instead of giving it all away for free? And there's reasons why. I'm talking to Mitch Ray about really explaining my life story. Because I think it would really explain why I do what I do. And then you would get it. So hopefully, you're here to learn. Let's leave it at that. I mean, I think the people that know me know what I do. So I don't I don't do the flash thing. I really don't believe in that. I think it's actually completely misleading that people do that. Showing you their Rolex collection or whatever. Hey, I've got a fantastic guitar collection, but and then that guitar collection's probably, I won't even go there. I mean, let's move on. Okay. Let's talk about Meta. Here's Meta. Up at the 1618. What are we looking for on Meta? Got to hold the 50 line. A retest of 445, most likely. And here's the deal with what Meta's done in the last 6 months, really since this year. Not able to get above this 127. There you go. Let's do it this way. $1618, it just shy as well. 568. Yeah, the vintage guitars. I've got I shouldn't even say this because the way I've been targeted, been hacked, was hacked earlier this year. Yeah, that's the other reason why let's just leave it at that. I've got I live in a 1-bedroom apartment with a Volkswagen microbus. That's all I've got. That's all you guys need to know. I'm that's where I'm at. You guys can find me down there. I'll let you know where you can find me in my 1-bedroom apartment. And you guys know I'm joking, right? Right. Meta here is still the same kind of a deal. High level continuation, just like last year. I say that because no, I think it's funny. I saw somebody recently talking online about that they go to steakhouses and they buy 3 filet mignon because they can. And I don't know why that people do that. And it's out there, but it just, from where I come from, guys, uh, back in the day, people would have laughed you out of town. So it is, I think it's kind of funny that goes on, that level of it goes on. Focus on the material and focus on what brings value to yourself. If not, move on from here. But what we're doing here, no one else is doing this. But there's Meta. Meta's just in this long channel. What needs to happen with Meta? Turn back up above the 50 on HSI. Meta is probably one of the strongest of the big tech, and you wait for that. Again, a lot of these signals are happening right now at a key point where they do need some kind of retest. With Meta, the interesting thing is this bat pattern type 2. Okay? We retested that at 518. And what happened? We went straight down to 455, and we're exhibiting another daily bullish dot. So I'm watching 500. Another reason why I think that's only a mild retracement, and then, really nothing. You crack the hop level at 548, then you get to your 1618 or much larger extensions, which is the plan for the next 1 to 3 years anyway. Remember this? I think you guys remember when I was like pounding the table 2022 about all of these patterns there. Meta at 116, it was 95 for a heartbeat. That's a massive long-term continuation structure, looking for this just to continue as well. The best thing about this for Meta is the fact that it's not given up a heck of a lot of room to go. Scotty, I'm kidding. I don't have a microbus. But funny, yes. Couple more. Big stocks, okay, that we really need to focus on. Here's Dell. And Dell, like Super Micro and a couple of those others, again, it's tough to see this where you say, Scott, that looks like garbage. It broke down the trend channel, broke down to that trend line. Isn't that a major failure? Nope. No, because we checked back. We checked back the first week. Last week was down. So this week and next week we'll get a dot and start looking for the continuation. Dell was another monster winner off of that 2022 pattern. And then break it to the daily right now. What do you have? What do you see? Bat pattern back at 91, which very well could get retested. You're currently 106. It's a shame we didn't get the full type 1, type 2 there and back down. And that for Dell, again, speaks to needing more time to go back, retest that. Here we are on the daily. Again, look at how the 50 breakdown point starts to leak it lower, and that's where we're at. The weekly is the same situation. Weekly broke down on the 50 a while back. There's amplified. Now trying to crack back up. It's not there yet, but that's the major event we want to see in all of these trends for them to turn back up and then start the resumption phase, continuation phase, whatever you want to call it. A couple others that are pressing. Listen, we got to look at Walmart because this thing is, I hate to use the expression off the charts, but that's what it is. Walmart is doing just parabolic moves here. And I still say it's overextended, with the exception that we did generate that counter HSI on the weekly, your all-time new highs. Look at this. You're well above that decade-long trend channel. Are we going to come down here, come back at all, and then go again? It is overextended, but this is how you know. Look, tell me about Amplified. Tell me about HSI, still expanding up. And that will not even be a signal until it fully rolls over. So I'm not saying this is an opportunity at this point. I'm more marveling at the fact that it's been such a strong trend without any confirmation. You let that keep running. The daily, finally checking back here. So it's 78 or 80. Okay. Maybe we could cap the rally. But I think this is also an example of a lot of these big cap stocks that are finding bids. I talked about that last time. Look, old economy stuff like Coca-Cola. No, there's a nice deep crab, but that's not what I was looking for on Coke. I'm more about the weekly. And I mentioned this last week, and I want to feature more and more of these kind of situations. These seemingly boring big economy stocks with perfect patterns. You go back to where we were back in October saying, look, 51 bucks, that's it. Start at 55, 51, and that's a major type 2 within the long-term trend. And I keep coming back to where we are relative to the next 5 years. And I want to find more like this at the low range of a trend channel, because this trend will only continue. You know, these stocks like this, they only continue. And so you get a perfect type 2 at the lower end of the channel. You're looking at a possible permanent low. What's that? A low that's never revisited again. Much like 2020, go back to 2016. Those are the kind of stocks you truly can hodl. And hodl is becoming quite the 4-letter word in crypto. But I think there's a lot of these. Here's another boring stock for you that, again, I think is fantastic. Dow Chemical, some weekly oversold. Here's the daily. Come on, give me the daily. Daily, big pattern on the bat. And so we're overlaying long-term weekly with a daily bullish type 2. And now you get confirmation on that downside. If it's 50 or 49, doesn't matter, because I'm looking for go back to 57 or at least resolve this entire long-term multi-year continuation zone and get yourself back up to challenge all-time new highs. That's the kind of situation we're going into. Whoa, next 5 years. That's how I want to be thinking for longer-term investments, using harmonics to define those pivot points, just like we did with Coca-Cola. Yeah, what do you want to look at? Let me know if you want to look at Forex. We can get into that. Why do I talk little about profits? What do you mean? Why do I talk a little bit? Because I do that stuff with the premium group. So if you want to join us over in the gold members, that's if you want to look at live trading and stuff, we do that with the gold group. There's also, in my opinion, I've done live trading, but with the public, but you're violating rules, or at least your risk of violating a lot of SEC, CFTC rules. And I've already had my experience with them, and that's a big part of why I don't do. That's why at Big Money I don't talk about the money aspect in the way that a lot of people do. You're literally violating SEC and CFTC rules. You know, I've been sued before by outfits unscrupulous outfits, $4 million defamation lawsuit, lost my RIA licenses because of the harmonic pattern work I did in the preceding decade. I don't talk about it, and I probably should. It would explain a heck of a lot of why I do what I do. But I've had too many run-ins where I want to keep it cool. As I started with today, look, you guys know I don't sell this. I'm not promoting here. You want to come into our group, jump over to the gold group, get the software and come there. And that's where I talk a bit more intimately. But publicly, heck no. I want to keep it fun. It's one of the reasons why I basically took off from 2011 to 2013, 14. Keep that in mind, man. There's a lot more behind the scenes than I think people realize. It's easy to get caught up in that other stuff. If you're here, you're learning harmonic pattern framework. What makes a pattern an opportunity? Why we would look at one thing versus another. These are skills, especially with this longer term stuff, that everyone needs to learn for the rest of your life. Are you going to go to an investment manager? And because they don't know squat, they don't know framework, they don't know metrics, they can't read a chart. They can tell you what they heard on CNBC. That's about it. You got to think for yourself. That's what we do here. Show you the framework, impart a little experience, and take the time to invest in yourself to learn. Because if you're not going to do it now, 20, 30 years from now, you're going to have to figure it out in terms of IRA or retirement. How are you going to get through after you're done working, pulling the paycheck? There's a lot of things, you know. I've got an accounting background. I passed all the exams to be a registered investment advisor. Okay, and then the best skill that I've ever learned or taught myself were the harmonic patterns and figuring that out. I've made way more money trading than I have doing anything else. So leave it there. But again, you want to see some more intimate talk, join us on the gold group. Just get that over at harmonictrader.com. What's up, Red? Yeah, they know. There are a lot of people doing Fibonacci. He's saying he knows hedge fund managers. Yeah, I know billionaires, guys. You know, I know people that are billionaires. Okay, I know people that manage billions of dollars. I've consulted for a multi-billion-dollar hedge fund several years ago. But they don't, you know, they kind of laugh at the retail crowd. And they don't give one, you know what, about any of us. And that's I've just been through too much in my life to not share the knowledge, not try to put something out there that's of benefit for the greater public, especially the trading public. And I've been swindled left and right, especially early on, by people that were trying to take things from me or claim I don't know, claim things that I've done. So there's a lot of garbage out there that you have to protect yourself against. The best thing I can do is do my best with identifying these relationships, the software, so that you guys learn, so you don't make the same mistakes I made. And I also say this to younger folks. I'm very encouraged by the number of younger people that I've encountered, kids that are not kids, but young men and women who are 18, 20 years old are like, hey, I want to learn this because I know I need to learn it. How can I get started? That's the best. Let's look at a couple others. That's Dow. You guys know what I'm getting at here. A couple of other ones that I'm really enamored with. Here's Philip Morris, although I've already brought that up. That thing is already gone, but that's something where another long term. We were back there off of that It was a delayed development at 90 bucks. Now look at it. This is what's going to happen to a lot of these kind of Dow style stocks or big economy. Here's 3M. 3M's another one. All right, that was a big weekly. Where was the weekly? Weekly or monthly? It was something really big down here at like 90 bucks. I'll come back to that. I'm just kind of, I'm riffing now. A couple others that I do like immediately that you guys should have your eyes on. Super Micro. Now talk about beautiful bat patterns. Okay, 384. I was almost ready to pounce on this yesterday, and I'm like, let's wait. I'm looking at around 410, 405 area. We have a 4-hour dot, a couple of 4-hour patterns down here. What needs to happen? Well, we just got above the 50 line on the 4-hour. So I'm looking now, at least for a short-term recovery pop. What needs to happen, kind of the final piece, can we get that to stabilize and get amplified to turn right back around? Speaking of turn right around, man, NASDAQ was down 100. Now it's back up 60. I'll jump to that in a second. One or two more. What do you guys have? General Dynamics. What's up, Carthago? How you doing today? Hey, how you doing? Carthago wants General Dynamics. It looks like this. It wasn't, Lockheed Martin was the one last year. Okay, beautiful. Why do I like this in the face of a bearish pattern? Again, another important little side note that here's the pattern. Okay, great. You could draw out the pattern, but where's the confirmation? There. Pattern's 275. Confirmation's like 300, but then it just gave you that little reaction and headed back up. I'm thinking 320. 320, you know. We're all spoon feeding money to these companies anyway. Anybody paying any taxes is most of it's going to these people. Lockheed Martin was this last year. Beautiful bat pattern. Wasn't a type 2, but it's an ideal weekly pattern within the trend. And we've talked about that with crypto, and I think with longer term stocks, we want to be looking for those that have long term trends going back 10 years. Can you do that? Let me pull up S&P stocks, because a big chunk of what I do is buy and hold off a weekly. Buy and hold and put it away. Things like Altria and Philip Morris are classic examples of the kind of stocks that I just want to buy and keep adding on those pullbacks and hold them for 10 years or more. Here's a couple. Let's go Caterpillar. Okay, Caterpillar, another long-term weekly uptrend. I like the fact that we've come off at 380. This is just basing here, getting ready for the next move, and then you've got this kind of a thing. Where's that bat? I had a bat pattern up here. It was a 4-hour chart. Had a bat pattern right at like 320. It was like right there. Maybe it was deer. Here's deer. It was a shark and deer at 345. Yep, and here's deer. Deer, Caterpillar, they're all very much similar. Caterpillar's probably the stronger of the two. Yeah, there it was. Deere. John Deere Company, 345. Been around for decades, if not 100 years at this point. Go to the weekly. Okay. Massive weekly continuation, 342. Even though that's been sideways for a few years. Now we can start looking at this as a potential high-level continuation. Get ready to continue your uptrend. And again, it's like this. We saw that in Walmart. And here's John Deere. Really boring, tractor manufacturer, farming equipment. Here's the long-term uptrend. Like, let's go back for the century. And this helps to explain why Walmart's doing what it's doing. Others, like, there's the static long-term trend going back to 2000. It's not drawn really well because of the way it's grabbing. But then it does some kind of parabolic, insane, like, what's that? You know, what's going on there? A new paradigm in the long-term trend, but this stuff happens. It doesn't have to always be NVIDIA, but that's the kind of thing within the longer-term trend that can happen to these stocks. They get the massive markup, you know, and you go back to history. I guess that goes back to 68. That's amazing. You know, there's Deere, and we've seen it before. So these kind of paradigm trend shifts, that's what we're playing on going forward. And you know what? Let's look at the diamonds quickly, because I've been thinking a lot about where are we? Like, what decade can we compare this to? Is this like the 80s? Is this like the 90s? Is this like mid 2000s? Because here you go back to the 80s, and I think that's a great decade, because anybody that's been around or following the market basically since I was a kid, and folks older than me, they remember the 87 crash, but the 87 crash was a blip. Okay, and just, it was a channel dip. That's all it ended up being, was probably the best buy of the whole century. Because after the 87 crash, that thing just continued on, and then took on a new trend paradigm, if you will, into the second half of the decade. That's the kind of accelerated move I'm looking for. Maybe that's it. Maybe it's 1994 right now. And in the back of my mind, I'm thinking we're doing this 3 to 5 year run. Okay, we have to get through the obvious resistance, but there's a lot of parallels there. And then what happened in the early 2000s? Yeah, we finally topped out, broke the trend channel, plenty of time, and then come back and give you a perfect bat pattern right around 7,000, 7,500. Those are the kind of things that help to frame out possibilities when, you know, in a million years, people were like, yeah, this is the big move. I remember people talking about it in 95, saying the Dow is going to go make a run to 7,000, 8,000, when people still couldn't get over the 87 crash. I think that's where we are. And if this is tech, semiconductors, space exploration, whatever, we're here, folks. We're here. We're screwing around with some overbought signals after an extended run. And once we resolve this, okay, we're going to take on this new paradigm shift of uptrend, aggressive uptrend, that will probably end ugly, but by that time, you know, Dow's trading 65,000. Okay, and a lot of this has to do with the money printer that, you know, younger generation understands. Money printer goes burr. But the money printer has been on since they went off the gold standard in 74. And even go back, this is this century. Okay, that's your railroad track going forward from 2008 low. Be aware of that in advance. I don't talk enough about these long-term harmonic dynamics, but they are spelling out a number of possibilities that I think people aren't aware of. Yeah, the dollar situation is only going to get more severe. Whether they tell you they're printing or not, just assume that this is all based on dollar devaluation, and that's not going to stop. So let's get ready. And I mean that. I mean, really get ready for not for after the election or the post crypto, whatever. What I'm talking about is we get through this current resistance, consolidation, pullback, whatever it is. Okay, we're looking for a paradigm shift, and we could even project it, I would say, off of like the 2020 low, where you, you do something, you break out in an aggressive way like Walmart did. I can't project it because of that, because I don't have price action. But I'm looking for this kind of accelerated move like that. And maybe I should spend another time of explaining why 65,000. But 65,000 is a long-term target that I've had for, since we hit 36,000. Let me put it that way. And in my volume 2 book in 2007, I said it is the year 2025 and we're at 36,000. I really do want to find that now and show that to you guys. I'll come back. We'll save that for another time. We have more things to do. But we can talk about these things while the market's sorting out the short term, which is a big 1618 reaction. What's up? Carthago's saying that it's dollar situation. Goldman got hit on the carry trade, dollar yen. Maybe. I haven't looked at that chart, Goldman Sachs, in a long time, but look, you would want to embrace a black swan opportunity that if we get one. We used to get the black swan moves, once every 18 months or so. And I just think the amount of money that they have put out in circulation since 2020, the 40% increase in the money supply, look, that goes somewhere and it eventually makes its way to the market. There's Goldman. I got nothing. Nothing. Maybe on the weekly, you've got a crab up here. Kind of a bat. Yeah. Not really. I mean, that you could say that's a forever stock, but I think something like JP Morgan is probably a better forever stock after we get through the crab. Now that's a beautiful pattern. And you'd want something like JP Morgan. Can we do the type 1 down to 173 and then resume it? We've been there before. Check out what happened in 2020. Almost identical, deep crab. We take it from dot to dot, straight through 122, I mean, all the way to 80, but that was the decade low, a permanent low. And that's the other thing about longer term instruments, longer term investments, that, again, I probably don't talk enough about it, where, I'm recognizing that a lot of these companies, they just move. Money supply grows over the years. These companies are the ones that facilitate it. So when you put in major decade lows like there, 2022, maybe not so much, maybe we get another one down here at 170, they're not going to retrace. It's not like crypto that's going to give up all of its gains after it does a 10x. It keeps on going. And I think that's something else to think about. I think more of this discussion has to happen so that when we get to those spots, all right, where you're positioned properly, the one that comes to mind, Boeing. So Boeing, a lot of bad press. Okay, a lot of negative sentiment on it. And I would say you're just coming back down for Boeing. Look, big spike up to 425. Beautiful. Coming right back down. But that does not change the fact that Boeing's not going out of business, that its trajectory, its long-term path forward is simply like this for the next 5-10 years. Can we get it down to like 140, 150? Because, yeah, we will eventually make our way back up to these all-time highs. Might take 5 years or more. But that's the kind of longer-term positioning I consider with these type of stocks. Companies is a better way to frame it. As we started a section, I really need to do more on it, but I started a section on forever stocks, talking about Apple and a couple others to come. of exactly this kind of list of companies to be sizing up. Buy them, put them away, pinpoint your entries. Like, where's the retest of the dot? Like 140 or 160 at the moment. Come on back down. Anything down here? Daily coming up. Couple of, yeah, not a lot. But I'll look at things like that frequently. Yeah, you know, Getty, if you want to check it out, yeah, I'll do Forex. What do you want to look at in Forex? And if you want an invite into the gold thread, send me an email, harmonictrader@gmail. I'll give you a 2-week to come in there and check out what we do. Okay, I'm not pushing anything on anybody. It's like, you guys come here, we enjoy the conversation, enjoy the education, we cover opportunities going forward. And then if you want to come in and see that other stuff, send me an email. Not a thing. Forex? What Forex? Specifically, what Forex? Because, you know, we've got a whole bunch of scattered markets. Forex is not anything quite like the market it used to be. And I used to work on did a summer internship on the floor of the Philadelphia Exchange when there used to be 30 currencies, like 30 European currencies. And it's kind of muted, mostly because of the euro consolidation and the dollar domination since those 80s. But here's British pound. I need a better feed than this other stuff. God, not crypto, please, no more crypto. Not on those feeds. Very frustrated with the crypto feeds and crypto in general. We'll get to Bitcoin in a minute. There's British pound. Not a heck of a lot. You know, I think the best thing to look at for if you're looking to play Forex, and I haven't traded Forex in, I don't know, last Forex trade was probably 2020. But there's a deep crab, and same principles apply. You know, pattern completion, look for confirmation, target one, type one. Don't know what else. Euro USD. It's probably similar to British pound. There you go. Let's go longer term, directionally. Okay, Euro 112, obvious resistance up here. But I prefer with Forex, because it's so choppy, go off of dot confirmation if it's daily or weekly. Because if you trade in between on currency, you're going to get chopped up. I stopped trading Forex years ago because the action just got super weak, and the futures, equity futures, NASDAQ, S&P 500 move a hell of a lot better. I just think it's a better focus of my time, but it still works the same way. Euro, checking back here. I think long-term Euro wasn't the monthly, and it's been a while since I've looked at that chart. It was monthly or something. There was, yeah, it was crazy. Maybe it was dollar yen. Not much I can offer there. I mean, other than still in your top end of a downtrend for Euro, where 112 probably halts it for now. But I think dollar yen is the chart to be looking at, despite what everyone said, you know, the carry trade or what have you. And I guess that was the excuse that they were citing last time. Hold on. FXCM that's a really solid broker in terms of data feed. Here's the thing for dollar yen. Okay, that we had this crazy crab pattern all the way down at the 80 mark, which spent 20 years basing down there. I would say we're probably overextended. I think we talked about the 166 level. What was it, earlier this year? What was it, weekly? Hold on. what was up here? Hop level 155. And that was a type 2. We had confirmation up here at around 158, and it, reached like a scratch above 160. Dollar yen, that almost is done. What I would wait for, and it's an oversimplification of the whole process, but we know it's oversold at the moment. Can we get a dot somewhere down there in the 140 area, 141, and just to go back and resume that trend channel? Go back, retest. Here's something that, kind of personal to me, that I know a lot of you don't really follow. Brazilian real. All right, and it's USD BRL. Looks like this. This is a sign of the other, and I hate to say second world, because it's not a second world. I mean, Brazil is as developed as any United States city in most cases. But this is something people don't think a lot about, but these other Latin American, South American countries have been faced with their own devaluation. And Brazil is just one example where this is about to break the critical resistance up here at 570. I already think 550 was the failure point. Where what does it do from here? Okay, another 1618 spiral move. This is one of the reasons why I think gold is doing what it's doing, because it's not so much driven by necessarily the dollar as much as other world currencies, where the people are losing so much purchase power, okay, that they hold dollars. I mean, there's people in Brazil that will just keep $100 bills and want to change it because they know their currency is garbage. Now, this is the kind of the theme of what is happening with the dollar versus hard assets like gold. Okay, it can get a little confusing, but the dollar devaluation against hard assets, if it's Bitcoin or gold or whatever, are mirroring these softer currencies like Brazil that have just continued to fail. And I think the next target here is 7 or higher. And we've seen that before. Mexican peso. Man, you really got me into a currency talk here. It's been a while, but it's been on my mind. Mexican peso. Oh, wait, it's USD, MXN. Mexican peso. Now, and they have a strong economy. Let me get a good, where's FXCM? Relatively speaking, but, manufacturing wise, but it's the same kind of a thing here. I mean, Mexican peso, with everything that's going on there and all the companies that have moved there into manufacturing, look, the dollar continues just to rage against the peso. And now you have another continuation here at 17. But look, this is why this really, it does exemplify why dollars versus, say, stocks will continue to move, because we know purchasing power against the dollar is getting degraded. And then you go to these other Latin American, Central American countries, you really see it. And before I get out of here, let's look at gold, because gold's the same situation. Gold's like this. 25.43, it's not coming down. I mean, gold's a $2,500 instrument now. That seems to be support, not resistance. And anything against that prior high, if you were to retest under 2,500, I don't think that's going to spend much time down there. If anything, from a harmonic pattern perspective, how do we read it? Well, there's the reaction, T1 to T1 dollar sign, reaction over. And then what happened on the return phase? We've talked about that. Came all the way back, no confirmation. There's official T2, but no confirmation. I would say that has failed at 2230, and you're hitting overbought. This is a monthly chart, but you're going to take months before that comes out. Hence why I'm saying gold will be trading about 2750 by the end of the year. Maybe if I got to stretch that to January, give me a little extra time, but there's nothing here to stop 2550. And probably the best thing is go to 4-hour or hourly chart, looking for continuation. Little dots, HSI arrows, like last one was here, was 2400. And you buy every pullback in the face of this shark. Like this shark here on the 4-hour, throw down, oversold reading, go back, throw down, oversold reading. Once you crack 2550, 2560, then you just continue like you did back here. Where is it? Yeah. That's a 4-hour chart. Look, that shark. I knew we had a shark back in May. Poke through, and then, yeah, I mean, we get above both of those. That's the case for gold. And so I've been saying this all year, that gold is doing, not in a bad way, but it's doing suspicious things. It's exhibiting a strong behavior that is among the strongest moves I've ever seen in my life in gold, which always leads to much higher prices. You know, and what prices? Well, let's do the extension. Let's connect some dots. Long-term, 10-year chart on a monthly. Where could this possibly go? Again, this is why you learn how to draw by hand. But there's X. There's A to B. It's a little high, but that's an 886. And so our minimum 1618, that's off the decade extension, is like 2950, 3000. So there's reasons why. You know, there's definite reasons why this argument of, I'm not just saying, hey, it's just going higher because it's been going higher. You connect the dots, put the framework on it. You've got 4 of the 5 points. This is the BAM or CAM, crab action magnet move, bat action magnet move. It's just a CD leg extension long term. A lot going on there. And that's happening while rates are plummeting. And I'm looking at the rate chart closely. Yes, what's his face is going to come out and he'll lower rates coming up. A lot of people are looking for that to be the marker of the end of the stock run. I'm not one of them, because we've seen that happen. Yes, it's happened before where it's led to a decline, but in other cases, like in the 90s, didn't happen. In fact, when they start cutting rates, that's when you got the second leg of that decade move. I still say you get back to, this is a 2-year yield, back to 3%. The inversion has resolved itself, and that's what people are talking about. But we have been talking about this big 1618 on rates. Okay, they can only move so far. Unless it was going to be a parabolic situation, we would have seen an explosion above 5%. And that was a scenario we scratched for many months, but couldn't get over and then rolled back down like that. And again, look at your indicators here. You know, we're oversold, but that's nowhere near close to signaling a turnaround. Couple more. What's going on? The uninverted could drop. It could drop us down, and that could also be a self-fulfilling prophecy. Everybody knows that. Everybody knows that. Everyone's anticipating that, and it might be the excuse that they float on CNBC and what have you. That's not my. I don't care. I want to see the concrete signals. Okay, and right now, we're just resolving what I think is an artificial move. I mean, this was artificial to be this low at 0%. And to me, that was crazy as well. But what happened here in terms of the 2-year yield was the fastest rise in history. And in my opinion, that was artificial. And they couldn't really pull it above the 1618. Meanwhile, we have crude oil futures. Okay. Crude oil futures are, we got to go to the weekly chart because $70 is the measured level here. Come on, where'd you go? Where's the pattern? Sorry, it's this bat at 65, and I think that's light sweet crude. What was the other one? Sorry, there was another. Maybe it was West Texas. Regardless, this is the big retest of that pattern. Okay, had it at target 2 there. Type 2 is at 63. Okay, this is just a big range, in my opinion. Weekly is like this. There you go. Just retesting the low end of that zone. Okay, so are we going to drill, baby, drill? You'd want that. I would love to see crude oil back at 50 or 60, you know, $2 at the pump. That would help inflate. That would kill inflation. That would destroy inflation. Quite frankly, we are oversold and we're hitting HSI now. So maybe after this week we can start looking at this again, because we do have things like XLE on the monthly, guys. Monthly, weekly too. There it is. It retested a whole bunch of levels. 99, 95. And the weekly is probably the better chart of the two. Crab pattern here on XLE. But just because crude oil is going to go down doesn't mean that necessarily this goes straight down, because if they're going to increase production, hey, that's a lot more crude they're going to have to pump. And they're going to have to pump. I mean, this whole green energy thing just is not going to get it done. Not yet. So you're going to need oil for the next 20 years, no matter what happens. Who's president? Go ahead, try to shut off the oil. You see what happened in the last 3 years. Okay, there's you go with at 90 here, breaking under the 50 level. All right, I say let it fall. You're going to get another opportunity here to pick these up again. And the one that comes to mind is ExxonMobil. You know, ExxonMobil hasn't moved off of that at all. That's the monthly. Here's a weekly. And that box has been up for 2 years now. I know we were talking about that where 1.4. I was long up into that hop level. Kind of wish I just held it, frankly. 114, you're still 110. You haven't moved. You pick up a 4 or 5% dividend yield. This is running out of time. I think you probably come back in, and the next series of oversold triggers will probably get you moving. So crude oil, even if the spot price comes down, I'm not really too concerned about the companies themselves, because we've been there before. Am I bullish on BTC? Not yet, but let's go there. Enough of that. I don't think we've done a deep dive like that in a while. And I'm happy to do that, you know, happy to get on to other markets, Forex, not all the time, because I don't think those scenarios change nearly as much. But, and look, Bitcoin's the same deal. That scenario has not changed until Bitcoin gets back above the weekly 50 level. You've got a lot of things here, a lot. And the 1618 level, okay, there's a reason why. Oh, shoot. Hold on one second. Hold on one second. I had a phone call. Okay, I've got to wrap up because I got to take this phone call. Bitcoin, and let's pick it up on Thursday. Okay, Bitcoin has to get above the 50 level, and that's all I'm going to say about that. And Bitcoin will be the catalyst for all of your other coins. So we've outlined those in the past. Last week we did, but that's the only thing for crypto that I even care about. Getting Bitcoin moving back above the 50 so the rest of the crypto holders, traders will pile in. And until that happens, okay, we're sideways to down. Man, you guys got me off on a tangent, and I had a meeting at 1:30, so I need to go. Anyway, come on back on Thursday, everybody. You guys have any questions, reach out to me at harmonictrader@gmail.com. Okay, you want to come in and take a peek at what we do in the gold member section, send me a note. I'll hook you up. Okay, pretty easy going.